copy that. We're going to paste that down here in H22, right click and paste it 1, 2, 3. Going to make this a little bit smaller, back down to 70 so we can post this out. We're going to scroll back over here. First account being cash. Cash will be our first account on the trial balance, first account on the general ledger. Here it is down here. We're on the debit side in 016 equals, pointing to that 5880. When we hit enter, cash will go up. Debit to a debit account makes the debit go up, puts us out of balance, no effect on net income. Let's post the receivable. Receivable here, that's our second account on the trial balance. That's our second account on the general ledger. Here it is in P32 equals, we're going to point to that 6,000 there, making the 56,000 go down to 50,000. Then we have the discount over here. Of course, we're out of balance by the discount because that's one thing we haven't recorded. Discount is down here, so we're looking for a blue account over. It's in the same order on the general ledger. So here we have the discounts. They're all going in the debit direction because they're contra sales accounts. Sales has a credit balance. It's a contra sales account, so it has a debit balance. Equals, and we're pointing to that 120 and enter. So now we're back in balance here. Also note though that we put an amount in the accounts receivable. We also want to record that in the subsidiary ledger. So I'm going to go to the subsidiary ledger over here. There's the 6,000 for RHB. We're going to post it over in the credit side. I'm going to do that by saying equals and then go over here and post that same 6,000 and enter. And now they owe us the 22.6, which ties out to this 22.6. Everybody that owes us 50,000 now. That includes all of our customers. That should tie out to the general ledger over here as it does, and it should tie out as well to the trial balance up here. All right, moving down to the next transaction. I'm going to make this go up again, go back to 90. I'm going to scroll over here. I'm going to guess that we're still on 428, and then I'm going to scroll down. I actually didn't get it. I have a cheat sheet here, so I'm going to scroll. Okay, so 428, we've issued credit memorandum to CF for return on merchandise. So then we have a sales amount of 500 and a cost of goods sold of 300. So this is a new transaction that we have. What happens is we're gonna imagine that someone returned part of the merchandise that they bought in the past. If that happens, basically you can think of that as we have to reverse the entire sales process with one little twist on it. So what you want to do then is look for a sales transaction, like here's a sales transaction, but in this case we got cash, but let's imagine we bought it on account, so that cash would be accounts receivable. If this is what happened and then they gave the merchandise back, this entire thing from here down would have to change, not the amounts, but these transactions would have to change. So in a normal sale, we debit accounts receivable, we credit sales, we debit cost of goods sold, and we credit merchandise. It's a lot easier to first think about the normal sales transaction and then reverse it with one little twist, right? So if we were to reverse this one, if this was accounts receivable and sales, then in order to reverse it, we would put sales on top with a debit and credit accounts receivable. So you would think that we would first start by debiting sales. Why? Because sales was increased. Now they gave the stuff back, so you would think that sales would go down. But we don't like sales going down because sales only goes one way. It generally goes up. We've seen before that we have this contra account for sales discount. We're going to create another contra account for returns. So in this case, returns is going to be another contra sales account. So we don't like decreasing sales. Sales generally only goes up when there's a problem in sales and we need to make it go down. Oftentimes we make a contra sales account, meaning it's in the sales section, but it has a debit amount to it. So that's what we're going to do here. Instead of debiting sales to reduce it, I'm going to debit the sales returns and allowances, and that's going to be for the sales price related to the amount that was returned. So 500 in this case. And then we're going to credit something for 500 as well. And the credit would be what we would generally think of. So if we had debited a receivable, obviously if we debited cash, like in this case, then we would have to pay the cash back and we would credit cash. But in this particular instance, we debited the receivable. Therefore, it's in receivable and we need to take it out of receivable. Receivable has a debit balance. We need to make it go down because they no longer owe us the money because they gave us the merchandise back. So we're going to copy this and paste it here, crediting the receivable. Then if we think about the other half of the transaction, it was debit cost of goods sold, not for that amount, but we would debit cost of goods sold when we made the sale, credit merchandise inventory, increasing the expense and decreasing the inventory. If we just flip that, then we would have to debit the merchandise inventory to put it on top and credit cost of goods sold. So we can think about that over here. Well, merchandise inventory has a debit. It needs to go back up because we got the merchandise back. And obviously if the merchandise was damaged or something, then that would not be the case and we'd have to do something else. But consider if the merchandise was intact and we got it back, we can imagine that the merchandise has now gone up. So I'm going to copy this and I'm going to skip and make a new journal entry, put it on the top of the new journal entry, and it's going to go up by the cost amount, not the sales amount. So the amount of inventory received cost us $300, how much we bought it for. Then we're going to have a related credit to that. And what's the credit? Well, the easiest thing is to look up here and see that the other half of that transaction is cost of goods sold. And that's the expense related to the selling of the good. And so we need to make it go down. And you might be saying, well, I keep saying that cost of goods sold only goes up. All these income accounts generally only go up. They do. And this is kind of the exception to the rule. So this, unlike the sales account where we made this exception and we made these contra accounts, cost of goods sold, we're actually just going to reduce it straight to the cost of goods sold account. So this is the return. We recorded the cost, but now the cost came back. So we're going to reverse this. So this is one area where an expense account, cost of goods sold, will be credited, making it go down, which is unusual. So we're going to copy that. We're going to paste that over here. Paste it 1, 2, 3. And then we can post this out. So I'm going to take this back down to 70. We're going to scroll back over here. We're going to post this one out so we can see that we're looking for sales allowance first. We can see that that is over here. It's in the blue area on the trial balance. So it's going to be in the blue area over here. It's in cell AA23. So we're going to say equals, and I'm just going to point to that 500, and that's going to increase the sales returns. We can also see it here on the trial balance, then the receivable. So we're going to credit the receivable, and that's of course our second account on the trial balance, second account on the general ledger. Here it is in cell P33 equals, and we will point to that 500 there, bringing the receivable down by that 500, and there we have that. Now we're going to post the second half of this transaction. We've got the merchandise inventory, and so that is the third account on the trial balance, third account on the general ledger. It's going up because we received it, so we're going to debit the asset in cell S16 equals, pointing to that 300, making the inventory go up. Then we're going to post the last piece of it, cost of goods sold, going down, which is unusual. Cost of goods sold over here. So we can almost see it. It's way over here. There's cost of goods sold. Notice it has all debits, only goes up, but here's the exception in the credit side. And I'm going to say equals. I'm going to hold down our arrows this time. I'm using the arrows. It's okay. It's going to change as long as I don't hit enter. Until I hit enter, that's when it stays the same. So there's that 300, enter. There it goes on the credit side, making cost of goods go down. All right, and that puts us back in balance over here, and we are good on that side. Also note though that we hit the receivable account again. Receivables went down, and if we scroll down here and see that it was HCH, so we have to also record that on the subsidiary ledger for the receivables are out of balance. We can see over here. So I'm going to scroll over to CF in B13 and say this equals. I'm going to go and I'm just going to post this same 500, the same information here is being posted to the subsidiary ledger. So now they owed us 13, now they owe us 12.5. That puts us back in balance. Total people owe us, total companies owe us 49.5. That ties out to the 49.5 on the general ledger, ties out to the 49.5 on the trial balance. All right, so we are going to go to the next transaction. So now we're still on 428 over here, 28. And we're scrolling down. We're going to issue a check for payroll. All right, so this is just a normal transaction that we have seen in the past. So this is a similar check transaction to what we would see in a service company. Is cash affected? In this case, yes. We're going to say cash is going to go down. We're not going to worry about payroll taxes at this time. We're just going to completely simplify the journal entry. Think about payroll taxes later. Cash is a debit balance, we're going to make it go down by doing the opposite thing to it, which in this case is a credit. Here's the debit side. Here's the debit will be next to the date. I'm going to put it on the bottom, right click, paste it 1, 2, 3, and we're paying out in this case 13,000, and we're going to debit the same amount, 13,000. And the question is, what are we going to debit? And that will of course be, in this case, some kind of salaries expense, some kind of expense. We see salaries expense right here. All expenses have debit balances. We're going to make it go up by doing the same thing to it, which is another debit. So I'm going to copy that. We already knew it was a debit because we credited cash. So there we have that. And I'm going to go ahead and post this out. So let's scroll over here. We're looking for salaries expense. So expenses down here in the blue area. So we're going to have to go all the way over here in the blue area. So there's sales. There's that salary. Okay, here's salary. So it's right there. It's going to be on the debit side. I'm in AE19. I'm going to say equals. I'm going to use the arrows again. I'm going to scroll over here with the arrows. And then I'm going to scroll down to my last journal entry, which is right there. And we're going to that 13,000 and enter. So there's the 13, makes that go up. We can see the 13 over here as well. And now let's post the second half of it, which is going to cash, which we can see is, of course, our first account. And we can see it down here. And notice cash has a lot of activity in it. We got more activity in cash and receivables in this case than anything else. We're going to point to that 13,000 credit, making the cash go down. Okay, so let's scroll back over here, and we're on the next transaction. I can make it larger this time. I didn't make it large last time, but I'll make it large this time. And we're going to scroll down, and now we are on 429, and that says that we issued a check for the phone bill. All right, so that's a normal transaction. We've seen this in the prior service companies, and so the transaction will be the same from merchandise to a servicer. And this type of transaction is cash affected. Yeah, we paid cash. Cash is going to go down. Cash is a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case would be a credit. I'm going to put the credit on the bottom of the date, paste it 1, 2, 3. The amount that we paid will be, in this case, a credit of 612. We are also going to debit something for 612. What will that debit be? Well, we paid for the phone bill. That sounds like an expense. All expenses are down here. And we can see that they all have debit balances. I'm going to call utility and phone. We grouped them in one account there. Obviously, it's up to the business to see how many accounts they want to break those out. Many companies will. And so I'm going to copy that and paste that down here. That will be the debit. Let's make this a little bit smaller again so we can post this out. The phone happens to be on the bottom down here, so that's going to be way at the end of our journal, of our general ledger. So let's go way over here. It's the last account. Utilities and phones on the expense. That's an AI15. And once again, I'm going to use my arrows. So I'm going to hit equals. I'm just going to hold down the arrow this time until I hit the wall, then go down to the last transaction, then find that phone bill. And then we can hit enter, and we see it populates here. So I'm in AI15, and the cell reference is I33. Okay, so then let's go back over here. And now we need to record the cash, which should be a lot easier because this is on the first account. So there's the cash account. So here's the general ledger for cash. We're going to credit cash. So I'm in P18 equals and point to that 612, bringing cash down. All right, so that puts us back in balance here. And we will then go to the next transaction, which I believe is another 429. So the next 429. We're on the 2 of 3, 429. Issue check for the electric bill. So again, nothing new here. I'll make this a little bit larger. We can see it. Issue check for the electric bill. So nothing new here. This is the same thing that we would do in a service company as well. Is cash affected? Yeah, we wrote check and it's going to go down. Cash is a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case would be a credit. Credit's going to go on the bottom. So we are in H37, right clicking and pasting 1, 2, 3. How much was that electric bill? Looks like it was 360. So that's the credit of 360. What will the debit be? Well, it sounds like an expense. We pay the electric bill again. The expenses are down here. They all have debit balances. They're going to go up by doing the same thing to it, which is another debit. And we can see that we grouped them together. And once again, it's up to the accounting department to see how much grouping they want to do within the expenses. And so we're going to copy that. We are going to put this down here on the debit side and right click and paste it 1, 2, 3. It's going to be a debit like all expense accounts go up in the debit direction, except for that unusual activity we had with the cost of goods sold a little while ago, but for the most part, the expenses are always going to go up. We're going to post this out, so I'm going to make this a little bit smaller now. Scroll over to the transaction, and here we have the utilities. So that's way at the bottom once again. So we're going to go way over here to the last transaction. It's up a little bit. It's not this one. It's kind of deceiving. We're going to be over here in AI16, and that equals, I'm going to use the arrows again. I'm just going to hold down the arrow till I hit the wall, and then go to the last transaction, and we're recording that 360. So I'm going to select enter, and there it records it. If I go on it, we can see that it should be I36 is the cell that it happens to be in my worksheet. So now we'll record the other side of it. So here's the cash on the other side of it. And so if we scroll up to cash, we see that cash is the first account, of course, and we're going to put a credit to cash. So we are in P19. So P19 equals, and then we're going to point to that 360 and enter. Cash goes down, back in balance. All right, we only get to do one more of these, and then we have to stop and move on to the next section. So the next one happens on 429 as well. The owner draws money out. So let's make this a little bit larger again. Make it larger like so. Okay, owner draws money out. So that means that the owner is taking money out for presumably personal use. So the correct way to do that would be the owner draws money out in something like a check and then puts it on the personal account and then uses it for personal use. So if that is the case, then cash is cash affected. Yeah, the owner's drawing money out of the business account, putting it into the personal account. Cash is a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case is a credit. So we're going to put that on the bottom. The amount drawn out being 10,000. We're going to debit something for 10,000. And who drew the money out? The owner. So it's going to be part of owner's equity, which is the blue section in here. And it's not going to be capital in this case. It's going to be kind of like a contra capital account, meaning we're not going to write down the capital account for the draw. We're going to make up another account so we can track how much draws were taken out during a certain time period. That is going to be called draws, and it's going to be a debit balance, which is basically really bringing down the capital account as a whole. So we're going to copy this, and we're going to paste that right there. And again, that's a lot easier to see if it's going to be a debit or a credit if we do the credit of cash first. All right, I'm going to make this a little bit smaller, and then we'll post this last one out. So we're going to scroll over here. We're looking for draws. So draws is going to be here. Draws is down here on the trial balance. It's in the blue area. So it's the second blue account. We're over here on AA9. I'm going to select equals. It's in the debit section. I'm going to scroll down so I can see my account. There it is, that 10,000, and enter. So draws goes up 10 to 10. We can see the draws here as well. So then we'll go over to cash, the second side of it. We're posting this side, cash our top account, cash the first account on the general ledger in P20 equals. Scrolling down, pointing to that credit. That should bring the cash from 75 to 36 to 65 to 36, puts us back in balance here. Note that the draws have no effect on net income. Net income is income minus expenses. The draws is part of the equity section. That's the point. And that's it.